So, you've probably heard of technical analysis, right? It's this whole world of trying to predict where the market's going just by looking at charts. Sounds pretty straightforward, but what if I told you there's a whole set of unspoken rules hiding just under the surface? Rules that, honestly, change the entire game. Okay, so let's start with the absolute basics. The foundation of all technical analysis, the market trend. Easy enough, you'd think. It's just, the direction the price is going. Up, down, sideways. But is it really that simple? Yeah, not so fast. It turns out even the experts have a tough time pinning this down. This quote from our source material basically says the word trend is, well, inconclusive. Think about it. When does a trend actually start? When is it officially over? What even counts as a real peak or a real bottom? The more you dig in, the fuzzier it gets. So right off the bat, we've got a major problem just defining the thing we're supposed to be following. But okay, let's just pretend for a second that we have a perfect definition. The next big question is, can you actually make money off it? Because as we're going to see, just trying to follow a trend is a whole other minefield. And I'm not just talking about a couple of small issues. Our source material lays out 10, that's right, 10, major hurdles that trip up traders. 10. That is a whole lot of things that can go wrong, even for the pros with the fanciest systems. So let's dive in and take a look at what they are. All right, this first batch of problems is all about, well, being inefficient. Things like getting your trade size totally wrong when the market's going crazy. Or, and this one is painful, when you're in a good trend, but you just don't capture enough of the profit. Then there's the classic problem of the market just going absolutely nowhere, just chopping sideways, and you get stuck. Or maybe you're just too slow to react when that trend finally does change on a dime. And then you've got the risks that happen the moment you click the button. We're talking about slippage. That's when you try to buy at one price but get filled at a worse one because the market moves so fast. Or, the very real possibility of just big, painful losses. You've also got the dreaded whipsaw, where the market jerks you in one direction and then immediately reverses, stopping you out for a loss. And get this, even if you do everything right, the fact that so many other people are using the same trend-following systems can actually mess up your results. It's a crowded playground out there. Plus, the very way people test these strategies can be broken from the get-go. Okay, so if this whole trend-following thing is so incredibly difficult, so full of pitfalls, what's the deal? Why does anyone do it? Well, it turns out that the entire world of technical analysis is built on 4 core assumptions. You can think of them as the unspoken rules of the game that pretty much everyone agrees to, whether they realize it or not. Rule number 1 is something called persistence. You've definitely heard this one before. The trend is your friend. It's basically Newton's first law applied to markets, right? An object in motion tends to stay in motion. So if a stock is going up, the base assumption is that it's just going to keep going up until something obvious comes along and stops it. It's all about inertia. Next up, we have duality. And this one is fascinating. It's the idea that for every bullish signal, you can find an equally convincing bearish one. Let's take rising oil prices. Is that a good sign, showing the economy is booming and demand is high? Or is it a bad sign, pointing to inflation and higher costs for everyone? Duality says you can make a solid argument for both sides. It's 2 sides of the same coin. The third rule is reversion. This is your classic what goes up must come down idea. It's like a rubber band. When things get stretched way too far in one direction, let's say everyone becomes incredibly bullish, euphoric even, that's often the biggest warning sign that a reversal is just around the corner. The market is just stretched too thin and it's about to snap back. And that brings us to the last and maybe the most mind-bending assumption of them all, prophecy. And here's the core idea. A line on a chart, some squiggly pattern, an indicator. None of it has any magical power on its own. Its significance comes entirely from the fact that millions of traders believe it's significant, and then they all act on that belief at the same time. So this leads to a massive question, doesn't it? If a tool only works because everyone thinks it's going to work, is that really analysis at all, or is it just one giant self-fulfilling prophecy? Let's take a look at how this actually works in practice. This whole idea of a self-fulfilling prophecy is actually the key to understanding why technical analysis seems to work better in some situations than others. Our source material makes a great point here. It's often more effective on longer time frames, like your daily or weekly charts. And the reason is super simple. More eyeballs are looking at the same thing. Think about it. On a chaotic 1-minute chart, you've got a fragmented group of day traders all doing their own thing. The signals are kind of noisy and less reliable. But what about a weekly chart? Now you've got the big players, the hedge funds, the major banks, and millions of retail investors, all looking at the exact same major support and resistance levels. When they all act on that same signal, their combined weight can literally move the market. That's what gives those levels their power. And this quote from the source really hits the nail on the head. A big wave of buying or selling is just going to be way more powerful if the reason for it is super clear and obvious to almost everybody watching. It's not magic, it's not a crystal ball, it's just mass psychology played out in real time on a chart for the whole world to see. So here's the thought I want to leave you with. Next time you see a technical pattern play out perfectly, ask yourself this. Did it work because the pattern has some kind of inherent predictive magic? Or did it work because millions of people, just like you, saw it, believed in it, and all put their money on the line at the same time, forcing it to come true? Is it analysis or is it prophecy? Definitely something to chew on.